Like I said, as always, make sure you guys subscribe. Make sure you guys share this, get the word out. I'm only one person. We want to build this up as a community. Want to build this up as a community. So make sure each one teach one. I know there's a lot of flaky investors, and we're going to kind of talk about that. But we are also going to talk about how we're going to build this thing and how we're going to grow from it. So first and foremost, as normal, make sure you guys subscribe to the channel. Thank you for coming. Where have I been the last couple of months? Because it's been since, I believe, March, since the last time I actually did a live stream. Yeah, I've been doing a lot of bullshit with the, Crucible, the URL bullshit. Um, I've been, my kids, I got twins that are graduating from high school, so we getting them ready for college. We're actually investing in the investment property for them. You know what I'm saying? So that's been, stuff I've been dealing with. And the biggest thing for me, and this is the reason why I'm probably gonna be done with this shit by the end of this year, is my investment into the marijuana industry. Um, it'll come into fruition. Just know that a lot of shit that I'm investing into now is gonna play its part in 2022. Um, Foresight is important when it comes to not only business but stocks as well. And that's gonna be a lot of what we talk about today. So let's get into it, y'all. In terms of the market today, as you guys can see, it's been pretty stable. Nothing crazy. Nothing shooting up too high. Nothing going down too low. It's a pretty moderate day. I'm gonna say it's gonna probably be like this for a while, where things are gonna be pretty moderate. You'll have stocks that'll go up super high. You'll have stocks that'll go down super low. But for the most part, stocks for a while are going to be pretty moderate. And there's a pretty important reason why that is. Inflation. Inflation is a word that a lot of people are not really familiar with. You think of this word, and a lot of people don't understand what this word is and what it actually means to the real estate market. But it is important that we all understand what inflation is and how it actually affects why stocks are what they are today. We all thought that, because of, the stimulus plan and all these different tax plans, that this was going to lead to the stock market just shooting through the moon. But that's not realistic. That's not how the economy works. Like, in order to spend money, you have to take money away. You have to owe money. Even though this money is printed, which it is kind of silly to say that we owe money, that is the reality of it. The more money that is printed, the cheaper the dollar comes, which means things become more expensive. Herein lies inflation. So I want to give the definition, which you guys can actually find this definition on Investopedia. If you type in Investopedia and type in inflation, it'll give you the definition of what this is. And I think it's important that if you're going to invest into the stock market, that you do understand what this is, because this speaks to why the market is what it is right now. So the definition of inflation is the rise in the price of goods and services, which reduces the purchasing power each unit of currency can buy. The reason why that's so important, the inflation rate this year has been higher. What's actually shot up higher than it ever has in the last 12 years. If you guys can remember what happened 12 years ago, that was the last time we had a really big stimulus bill to get us out of the bullshit we were in back in 2009. Now, what does this mean for us? The cost of things going up. Um, so when we think about what's going up, what are some of the things that are going up that can actually lead to inflation? Really important things that you should all know, because a lot of this stuff has to do with us. Gas, that comes with inflation. As you can see, the price of gas has gone up. Car sales. A lot of people, if you guys have been looking for car rentals, you're probably wondering, damn, why is car rentals so expensive lately? It's a simple reason why. We ran out of microchips, so new cars aren't being sold as much, which means used cars have been sold crazy, and we're running out of used cars. So what these car companies are doing is they're buying cars at the same auctions that car rental companies normally get their cars from. That leads to car rentals going up. This is a part of inflation as well. Car sales, real estate. If you guys have invested in any kind of real estate or just looked at the real estate market over the last year or so, Real estate market has not been affected by COVID. It just hasn't. The price of houses have gone up crazy. Besides New York and maybe the Bay Area, everywhere else has just gone up super, super crazy over the last year. Cost of construction materials. If you've actually invested into some type of, remodeling in the house, whether it was floors or, remodeling a bathroom or kitchens or whatever the fuck, these, if you know that these prices have shot up. The cost of lumber, the cost of some of these materials have shot up. All these different things cause inflation. It raises the prices. And really just COVID in itself. You know what I'm saying? COVID in itself has caused inflation because a lot of restaurants and a lot of companies lost a lot of bread. A lot of bread last year. A lot of companies went out of business. So in order for some of these companies to get back, they have to raise the price. It's necessary. They have to raise the price. So this is what causes inflation. These are key components of the U.S. economy that can affect the stock market. So this can affect stocks two different ways because there's two different types of stocks. It is important to know what type of stocks you guys are investing in when you guys are looking into these stocks. We have growth stocks and we have value stocks. Um, Now, growth stocks are stocks like Tesla, Apple, stocks that are pretty volatile. Like they're volatile, they're risky stocks, but they have a super super high upside. But long term, you just really don't know. Most times, tech stocks fall in the category of growth stocks. They normally don't pay a high. They normally don't pay a high dividend. It's just a risky stock, but it normally has a high immediate reward within the next 2 to 3 years. So once again, that's the Teslas, the Apples, a lot of the tech stocks. Uh, and the other type of stock is value stocks. Now, value stocks are what we consider penny stocks, stocks that if somebody, let's say, for instance, a S&P 500, that's a value stock. Berkshire Hathaway, that's a value stock. Stocks that aren't going to really ever shoot up crazy, but it's just constant growth, constant growth. Now, inflation really kicks the ass of growth stocks because one of the reasons why it kicks the ass of growth stocks so much is because inflation is based on right now. What's going on in our economy right now. And when you're dealing with the stock that you're looking to see a big, jump within the next 2 or 3 years, like a Tesla, like an Apple, like some of these stocks that you guys are investing in to get the quick lick, these are the stocks that are most affected by inflation. So anytime inflation goes up, a stock like Tesla, a stock like Apple, a stock like, any of these stocks that you can think of that have high growth potential now, it's going to be affected by it. And you can't really duck it because the thing about inflation is it also brings in jobs. Like that also brings in jobs. So you kind of got to take the good with the bad. So inflation isn't a forever thing. I mean, these things fluctuate and eventually we're going to catch up to inflation. What a lot of that has to do with is people getting back to work. As long as people are consistently getting unemployment checks and just relying on the government to get paid, inflation is going to always be an issue because as the prices raises up, we're still stuck on that unemployment same rate, which means that we're never going to catch up to it. I hope this makes sense because this is a key component to stocks, making sure that people are actually getting to work to actually be able to pay these rising bills. So until that thing catches up, volatility will always be in growth stocks. Now, value stocks, even though you won't see a huge return right now, it doesn't really get affected by inflation because it always thinks about the long term. Now, keep in mind when I name these two stocks off, neither one of these are stocks that I said you get off within the next week or month or year. This is something that I've been preaching to y'all. It is important to know you shouldn't be in the stock market if you're not looking to stay in it within the next 2 to 3 years. Period. Tax reasons and growth purposes. If you're doing this shit for the quick flip, cop a bow. Well, I shouldn't say that. Do something else. Do something else to where you can turn your dollar into two. Get into auctions. Learn a trade. Get into different things that you should actually. I shouldn't say flip bows. Don't sell drugs, guys, unless you're doing it legally. But the point is, my whole point is that if you're looking to get the quick flip out of this, if you're investing into stocks that have a quick rise, they will always be affected by inflation the most. So when we're seeing Dogecoin or Bitcoin or some of these other stocks that we've seen just shoot up over the last couple of weeks, Don't think that Elon Musk is the reason why this shit is going up. Yeah, his words can make it go up or down a little bit, but the consistent growth or lack thereof is because of inflation. Once again, inflation. Learn this word. It has everything to do with why the stock market is what it is. The reason why it is what it is, at the end of 2020, and you can look this up on CNBC. It was actually reported back on the 12th of May. The inflation rate was about 1.25%. As of May the 12th, the inflation rate is 4.2%. Now, do we understand why the market is what it is when you hear those numbers? It's jumped up almost over 3% in the last 4 months. Once again, that is the highest jump in inflation rate since 2010. 2010, which once again was the last time we had to put a lot of money up to recover the economy being shitty. Our economy was shitty because of COVID now, so we had to put a lot of money into it to get it right. We just, as a people, have to catch up with this inflation, which means people have to go back to work. It's just how it works. So there you go. The other thing I wanted to talk about, with that being said, is that Secretary Yellen, who is the Treasury Secretary. It is important to know the names of these guys I speak about. Janet Yellen, she is the head of the Treasury Secretary. She's the head of Treasury, the money of the United States. We've been talking about Jerome Powell, who is the head of the Federal Reserve, and Joe Biden. These three people really affect the market more than anybody else you can think of, more than Elon Musk too. These are the three people who really, really affect the U.S. market. When they talk, these really make ripple effects in the market. She said that this $2.2 trillion infrastructure plan will boost profits. Once again, it will cause more inflation, but as long as part of this $2.2 trillion infrastructure package is about the billionaires paying taxes and more jobs, so people get back to work. So if people actually utilize this stuff, yes, the inflation will go up higher, but eventually we'll catch up because people will get back to work. Just know, as long as people consistently stay on unemployment, this inflation will be an issue. So that's pretty much it for today, guys. I'm going to try to make a point to where anytime I'm doing this, we're going to keep it under 15 minutes if possible. This will be Tuesday, Wednesday, and Thursday, strictly information on what's going on real time. I will be starting a Patreon at the beginning of June, which will speak more to specific stocks, specific cryptos, and things that you should really look into. I'm still trying to figure out how I'm going to do the pricing, but you know, we're going to get detailed in terms of what companies are going public, what companies are going to doing their quarterly calls where they're letting people know what they made that quarter, things that really make or break the stock market. We're going to save a lot of that for Patreon. We're also going to get back to the podcast when I can. I mean, I'm a busy guy, so I ain't gonna really press that. But anytime that I don't do podcasts, I will every single week either drop a podcast or I will drop a tutorial that is useful for people who are looking to get into investing, whether it's just how to start how it's to start it, how to maintain it, and how to look for different trends. So these are things that are going to be part of my Patreon. Once again, that'll be available June 1st. But yeah, I'll be back tomorrow, and I'm gonna hold my word. We're gonna do this until the end of the year. We'll see how it floats from there, and yeah, past that, y'all have a good